In today's Money Watch, we are talking about interest rates. They've been on a 23-year high since last summer. The Federal Reserve will discuss that at a policy meeting starting today, just a week after the government released downbeat news about the economy. CBS News business analyst Jill Schlesinger is here to break it all down. How you doing?
Doing well.
All right, so you say you don't expect the Fed to change interest rates right now. Why not?
Yeah, I mean, look, the Fed's #1 goal is to lower the inflation rate. And, you know, for this will be the sixth consecutive meeting. I don't think they're going to do anything. Again, interest rates at that 23-year high, short-term interest rates, 5.33%. And while the Fed pushed rates up to push down the inflation rate, they did a good job in the beginning. But let me tell you something. Inflation still remains a problem. It's running at 3 or 3.5%, depending on the measure. And the Fed wants it down to 2%. So at this meeting, expect a lot of nothing.
Okay, a government report shows the economy is slowing down. So what should we make of this?
So we're talking about the gross domestic product. That's the tally of all goods and services sold in the U.S. And in the first 3 months of the year, you're absolutely right. We are coming off a year where we had economic growth that really exceeded expectations.
Yep.
The first 3 months was really a bummer, 1.6% on an annualized basis. Most economists were thinking it was going to be 2.5%. So that 1.6% was kind of a drag. Now, the thing is, when you look at that, you say, wow, isn't that what the Fed wants? They want slower growth. But inside that report, it showed that actually inflation ticked up. So the Fed, again, is not happy when things slow down and prices remain high.
But there's some good news for borrowers, right?
This is the real beautiful part of high interest rates. If you're a saver, you're psyched. And you can get 4 or 5% on short-term CDs or money market accounts or even a savings account. So if you haven't done it, please jump on it and lock in those CD rates because these rates will go lower in the future.
Okay, so people that are looking to save, this is a good time. And then also touch on the stock market a little bit.
If you're a saver, things have been good. Stock investors have also enjoyed a nice ride. We had a very strong 6 months. We came off the highs back in March, but to be clear, stocks are still up about 7% this year. So all good for the investing community.
All right, I'm gonna need you to break down the borrowers and mortgages a little bit more because I feel like people are always interested when you talk about homes.
We're going to do that.
All right, sounds good. Thank you so much, Joe. We appreciate you.